Now you're going to have that demand for US dollars go up dramatically. That's going to help with inflation, and it's going to stave us off like in maybe another 50 years, maybe until it's a way for our government to control our money even more. Yeah. So I've got a pretty interesting perspective on this. I think that I know what's coming and how it's all going to happen, because you mentioned, assets being tied to Bitcoin. Well, when you look back at the gold standard and you see how it was tied to money, there's a model there that's built that already shows how Bitcoin can be something that backs our money. But you also mentioned, but the governments aren't going to, they're not going to allow that. Well, you have these Bitcoin people, they want everything now, right? The Bitcoin maximalists, they see the system is broken.
Give it to me now.
Want it now, but that's not going to happen. That's not going to happen. It's going to be a long time. I actually think it's more like 50 years before our complete fiat system unravels around the world. You're starting to see it now, but governments are so good at delaying this stuff and putting in measures to push it out as far as it can go. It can go much further than it is right now. And so kind of the way I see things happening is I do believe in about 50 years, give or take 25 years on either end, I think we will see Bitcoin replace gold as the standard for money. And it will not be where you're sending Bitcoin back and forth. It will be where you have stable coins backed by Bitcoin. And that's the way I see that playing out. But the CBDCs got to come first, right? I say all the time, it's not about the battles. We're going to have many battles we're going to lose. We've already lost tons of battles in crypto. It's about the larger war. And I think that the war, eventually, it does go the way of crypto, because it's just the evolution of technology. It makes sense. It fits everything people are looking for. But in the short term, to really show that value that Bitcoin has, we're going to have the fiat system lose some battles. And I think that battle is going to be when they, when the CBDC, especially in the United States, gets launched. The average world reserve currency sticks around for like 98 years, something like that, somewhere between 90 and 110 years. If you look back throughout the history of world reserve currencies, United States dollar, US dollar, we're right in the middle of when things should be transitioning. I believe that USDC, the Coinbase dollar, backed by Circle, backed by Goldman Sachs, is the plan for the United States to eventually make that the United States digital dollar. And I think that digital dollar is going to become the CBDC of the United States. And what we're going to see is the world reserve currency is going to transfer from US dollar to US digital dollar. It's going to be like a new currency. And if you think about it, if it is USDC, and there is a lot of reason to believe that that's true, why would they reinvent the wheel, right? Like everything's already there in place for them. We know Coinbase, Circle, Goldman Sachs, they were very close with the government. We know Jerome Powell has said that they like the private sector getting involved. They're open to the private sector creating the CBDC. There you go. They've got everything down for this to occur. What you're going to see is, imagine around the world if anybody with one click can now buy US dollars with the USDC or with the CBDC. It's going to be on every exchange. One click. What does that do? That is going to push the fiat system further, because now where you have only been messing with the supply of the US dollar with the printing of the currency, now you're going to be able to dramatically increase the demand for it, as around the world people will be able to buy it with one click, and it'll be very easy. People will be doing transactions, trades, all kinds of stuff, leverage, derivatives trading with the US digital dollar. And that's going to, in this already like borderless economy that we live in, this worldwide borderless economy, now you're going to have that demand for US dollars go up dramatically. That's going to help with inflation, and it's going to stave us off like in maybe another 50 years, maybe until we get to the point where that fails as well. So that's kind of how I see everything happening. Obviously, CBDCs are very bad in terms of government surveillance, government control. You don't want to be like, oh, I have a low social score, so today I can't spend my money. But that's what the government can do when they do have a CBDC in place. So it's scary to think about where things are going. But like I said, I really ask people to look forward and say, this is a necessary evil. This is actually a necessary evil that we're going to need to get to where we're going. Every strategy when it comes to our crypto accumulation or our trading, definitely, last year on my channel live, over about 30, maybe it was 2 months, between 30 days and 2 months, we leverage traded like $80,000 all the way up to $1 million. It was really cool to do. Obviously the price was going ballistic, and we were only taking longs after dips. We were using Market Cipher as the trading indicator we were using to do it, and it did very well. We took that $1 million, we turned it into all kinds of stuff over the bull run. So that was cool. I haven't been trading as much lately on a daily time frame or in an hourly or a 4-hour time frame, because it just takes time. This is what people don't understand is it's not just you have a bunch of money and you can trade. Like, you literally have to put the effort and the time in, like a full-time job, to really trade and do it well and do it successfully. So for me personally, like, I just don't have that time right now. If I did have the time, I can do it. I've proven I can do it, but my time is better allocated to it, doing other things at this point. Now, when the bull market comes back, I have a bullish bias. I think it's really important to understand your bias. Some people have a bearish bias. I have a bullish bias. So for me, it's much better not to trade in sideways action, not to trade in down bear market action, to wait until we bottom and start moving up at a dramatic pace, and then get those dips and then long. And that's where I'm going to find my most success. When you find yourself forcing trades, based on your bias in a market that isn't fitting your bias, you're going to have a really hard time. And I know people want to take emotions out of it. Like, that's the whole goal of trading, but there are some things inherent in you that are going to make you prone to do one decision or the other. I know the things inherent with me, because I understand the big picture of crypto. It makes me want to trade more and go long, even when it doesn't make sense to do it. So I'm going to wait for the market to line up with what I like to trade and how I like to trade. So, during the bull run, I'm sure when that comes, 2 years, I'm sure we'll get, back to, a lot more leverage trading. When it comes to spot trading, we do a lot of spot trading. We have several portfolios that are public that we show our people every single Friday. We have a 25,000, a 5,000, and or 25,000, 10,000, and a $1,000 sample portfolio. These are real portfolios that we, actively have crypto in. We show people how to build one of those portfolios. They're all stablecoin heavy right now. They're all at least 60% stablecoins right now, because we don't think that we've seen the bottom. Now, when it comes to long-term investing or DCAing, I do have a portfolio right now where I'm doing like $100 a day in Ethereum, $50 a day in Cardano. These numbers are, most of the stuff that I do is really for my channel. It's really so just people see. That's why, I don't think it's important for me to go make $1 million trade, because average person out there can't make that. And so that's really just pie in the sky for them. I want to show them how you get there. So that's really what we do on the channel, is focus on, kind of numbers that we think people can relate to at least. $100 a day or $150 a day, dollar cost averaging, that may be more than a lot of people can afford, but people can see that number, be like, okay, if you can do 100, I can do 25 or whatever it is. So we try to show people how to do that, and what it looks like and the compound results of that. When it comes to the long-term investments, obviously Bitcoin, Ethereum are the two things you want to stack up right now. I think right after that, you've got Cardano, XRP, Polygon. These are all things that I think are long-term as well. Polygon, at least until all of the ETH roadmap is done, which will probably be 10 years or so. So you got a while to accumulate Polygon. We really look at trying to accumulate things that we're very confident are going to be around for the long term. There's no point in holding something long-term that you don't know if it's going to make it or not. And there's only probably about 10 coins that I would look at and say, okay, I'm very confident these are going to be around in 10 years from now. And 10, if you take out stable coins, 10 may be overkill. It may be more like 6, 7, 8. So, I mean, you look at something like Sandbox. Like, I love Sandbox. I think it's a long-term hold. But in 8 years from now, the metaverse, community is going to look totally different. And by 8 years, maybe there are some that have risen up to be better. We definitely think over the next 4 to 8 years, it's a good hold. But long term, we don't know yet. We haven't even seen the finalized product. You look at the ones I mentioned already. Your Cardano, your XRP, your Ethereum, Bitcoin, Polygon. I think outside of that, you look at like Chainlink. I think Chainlink's going to be around, but you even have people now that are saying that there's this Oracle problem and maybe Chainlink won't even make it, which is so crazy to me. But it's really about looking for those long-term holds are going to be around, and there just aren't that many of them, to be honest. Actually, we just did a video this week where we talked about 5 areas, and what you have to understand is I have a rubric that I kind of grade things by, but that doesn't necessarily mean that everybody should use that same rubric. This is what we talk about when we say do your own research. It's not just DYOR. A lot of people take that to mean watch 3 YouTubers and make a decision. Like, no, that's not actually what you should be doing. You need to implement what you're learning and create your own way of grading coins, like whatever you think is the most important. Like for me, I tend to leave like tech and development out because I'm not a development person. And so I can't really, all I can go off of is what other people say. Like, oh, this person says it's good tech, so it's good tech. I take things that I can look at and I can judge. And that's kind of how I decide. You look at the community. Community's extremely important when you're looking at a coin. And it can be a little misleading when you're looking at lower cap coins, because there's a lot of bots out there that try to make it look like, you know, coin 742 on CoinMarketCap's got all kinds of followers, when in reality it doesn't. You're looking at the team. You want to know, like, you know, is it a 16-year-old kid as the CEO who's never built anything before? Like, that's important information you should know. Is there somebody that worked at Google? Is there somebody that worked at Amazon? Okay, were they an intern there, or did they really actually have a high position? I think those are definitely things to look at. You got to look at the tokenomics of a project, and that's going to include the price. That's going to include the distribution. That's going to include how the circulating supply comes in. You know, a lot of people that get really tripped up, they say, oh, well, I want to buy Shiba or Dogecoin because the price is so low. Like, look at the price. The price is simply a product of dividing the market cap by the number of coins. That's how you get the price. The price is actually a result. It's not something people set. And what you have to understand is a 100% gain is a 100% gain. It doesn't matter if you have a quarter of a Bitcoin or if you have a million Doge. If it goes up 100%, your money doubles. So actually how many of the coins you own and the price, it doesn't matter that much. It's more the market cap. So you got to look at the potential. So that's why I think looking at the tokenomics is extremely, extremely important. Then what I think is the number one most important out of all of these is the use case. Like, is this something that's going to be around? Dogecoin doesn't really have a use case. Shiba doesn't really have a use case. SafeMoon didn't have a use case. That's why we tend to stay away from those. Now, certainly when Dogecoin was going parabolic and Elon Musk was tweeting about it, we did some trades and we traded some Dogecoin, you know, because it was very advantageous. I bought it at a penny, sold it at 7 cents, bought it back, I think, at 14 cents, and then, you know, sold it at 68 cents or how, you know, wherever, basically the top. We sold it the day that, you know, Elon Musk was going on Saturday Night Live. So there are times you can trade these coins, but you're not choosing them for your investment, if that makes sense. You can certainly spot trade with them, but not for long term. So I think the use case, when you look at like Chainlink with oracles or Polygon with layer 2, when you look at layer 1 protocols, our number one investment of all time has always been layer 1 protocols. Huge use case, right? So I think that's something very important. And the last thing, this can often be a deciding factor for me, is like, what is the philosophy of this team? What is the philosophy of this coin? What is the philosophy of this community? So like, we were trimming down our portfolio to less than 20 coins. We remove eChain from our portfolio. Why? Well, geopolitically between the United States and China, I don't want to support China. And it's a Chinese project, and the government's very tight with them. They've now gone on it. They've opened an office in Europe. They're kind of trying to get away from that, which I could kind of swing back that way maybe if they were going to do that. But that wasn't the only thing that went into my decision, right? That was like when we were looking at 3 or 4 coins, we use that as kind of a deciding factor. Like, which one of these coins is not like the others? Like, which one has a philosophy maybe we don't agree with, or something we don't want to support? It was a deciding factor. So I would say that's probably the least important. Now, we recently sold out of FTT and Solana because you know, some stuff is coming to light about Sam Bankman-Fried, and I don't want to support anything he's doing. So, and it's very, very serious, and it's very, very bad. So, and there are times where the philosophy can be so bad from somewhere that you just say, I'm pulling out of this project. You don't want to usually lead with a philosophical decision to make or break your portfolio. So it can be a deciding factor. That's kind of the 5th thing I take into consideration. But yeah, those are the 5 things I take: use case, team, community, tokenomics, and then philosophy as a deciding factor.